Welcome to the welcome viewers. Welcome to our uh, ongoing series where we talk with the top hierarchy, top management of the AMCs to understand the insights, the reasoning, and the features of the new fund offer that they are bringing to the market. Just like that, today we have the Axis Quant Fund and the fund manager of the fund, Mr. Karthik Kumar with us. Welcome to the talk, sir. He's an investment management professional with primary expertise in systematic strategies, portfolio management services, and product development and research. He's responsible for setting up the quantitative vertical, designing and implementing quantitative strategies across platforms. And he currently spearheads the ongoing quantitative research and product development and has developed the entire infrastructure including the database, testing engine, risk model, and optimizer for the AMC. Very happy to have you here, sir.
Thanks for having me and look forward to the conversation.
Yes. So the very first question that I would like to ask you here is, what is the momentum? What is momentum investing, and why this strategy has its upside?
Okay. So momentum is in a way, it's all basically, if I were to give you a cricketing analogy in a simple terms. So let's say you've got a batsman who's done extremely well for the last two series or 10 or 14 innings, and the batsman comes out to bat. You are confident that he's likely to do well because he's done well previously. In
Correct.
cricketing terms, we say the batsman's form is great. And
Yeah.
what is form in cricket translates to momentum in investing. And I use
Okay.
the word investing very broadly because momentum works across asset classes,
Mm-hmm.
right from commodities, FX, interest
Mm-hmm.
rates, and works across equities across the globe. So what
Correct.
we say here is if a stock or if a theme or if a certain cross section of stocks have worked well over a recent time history with when the trend is established,
Correct.
then the trend is likely to continue for some more time,
Correct.
and that is typically momentum at its simplest form for you. Um, and uh, and it's, as I said, it's done well across cycles and across asset classes, and that's why we are coming out with our new fund, the Axis Momentum Fund.
Correct. So the next question is that I was going through the the fund deck of
Mm.
the Axis Momentum Fund. It says the fund has the philosophy of buy high, sell higher. Okay,
Yeah.
it's a little unusual to listen to. I mean, we always
Mm.
listen buy low, sell high. Can you
Yeah.
please simplify it for us?
Okay. So, as I said, in momentum investing, we
Mm-hmm.
basically we look at stocks, or we look at themes, or we look at sectors that have done well in the recent period. And once the trend is established,
Mm-hmm.
then we kind of latch onto it because normally the stocks continue to outperform. Now we can get into a discussion of why that is the case
Yeah.
separately. But to start with, so because I'm first trying to measure the trend, and I'm first trying to establish that there is an upward trend,
Mm-hmm.
obviously I will miss out on the initial part of the rally because you take time to establish the trend, which is why
Correct.
you will never buy at the low. You will buy at you will buy once the price has rallied from slight lows, and then you will as the stock keeps going up because of the momentum effect, we will sell it subsequently higher when when the momentum signal kinds of fades away or starts weakening. We will kind of exit. So which is why we buy higher to sell even higher. To kind of give you a corollary, if you think about PSU stocks, right, they were
Mm-hmm.
value stocks for a long time.
Yeah. Yeah.
And they only started rallying mid of 2022.
Correct.
But what happened is, once the stock started doing well for a couple of months or 3 months, then people started taking comfort in the fact that the stock's doing well, plus it is cheap as well. So that is when
Mm-hmm.
momentum latched onto it. It was
Yeah.
value for a long time, but eventually
Yeah.
you needed momentum to kind of to catch up to that whole theme. So that is what we are trying to do. We will never time the bottom, but we will
Uh-huh.
get in higher to sell it at a much higher level. And in fact, this trend is not just pertinent to investing. You will find momentum in a lot of areas, like we've put out in our deck. Even in technology, for instance, adoption of UPI is a classic case of
Correct.
momentum.
Yeah.
Started out
Yeah.
slowly, then 2019-20 were years when we added sizably to the UPI pie. The reason is COVID predominantly, and then subsequently as phone costs kept dropping, 5G mobile costs kept dropping, and the telecom cost kept getting cheaper. You had UPI kicking in big time, so there you got a momentum, and that
Mm-hmm.
momentum eventually will tail off. But that is
Absolutely.
typically how you get it across sectors. So this is a phenomenon that works across.
Okay. So the next question comes about the risk management of the fund. Is that what specific measures are in place to manage risks, especially during the volatile or the negative market phases?
Okay. So if we can take a step back before that aspect,
Mm-hmm.
to talk about momentum, because there is a larger misconception or a misunderstanding in the market
Mm-hmm.
that when markets fall, momentum has to underperform. Um,
Hmm.
so there are two things. One, momentum is a slightly higher risk strategy, which actually is true. But then if
Mm-hmm.
you look across time period, and we again have it as part of our deck, if you look across time period, it has compensated for that slightly higher risk with substantially more higher returns. So it
Correct.
has been worth taking that risk because you've
Yeah.
got much higher returns for that. So now coming to the second part, the other assumption is that when markets fall, momentum has to fall. Well, that is not necessarily true. See, in momentum, what we are trying to do is we are trying to first establish a trend, first figure
Mm-hmm.
out where there's a trend, and then invest in it. As long as those trends stay valid, and
Hmm.
if the market is correcting gradually or going up gradually, then momentum can outperform both in a down market and up market. What is necessary is that the trend has to be pertinent or valid.
Okay.
If there are large changes in the market in a very short period of time,
Mm-hmm.
uh, uh, and when I mean short, extremely short period of time, or you get black swan like events, then your trend becomes invalid. In which case, momentum as a style takes time to figure out what's the new trend, and during that course, it may underperform. So, for instance, in 2011, when markets fell by 26%, the
Mm-hmm.
Nifty Momentum Index fell by 16%. There was an outperformance of 10% because the correction was gradual. The
Hmm.
same thing in 2020, uh, when markets were falling in Feb and March of 2020, because COVID was well known by then, because it had hit other parts of the world before it hit India. The markets were already, in a sense, prepared for it, which is why momentum index kind of outperformed the broader indexes then. But the place where it underperformed is in 2008 and 2009, because 2008 you saw it was an actual black swan event out of nowhere. So
Yeah.
markets fell by 57, 58%. And the next year, it completely turned around and went up by 91% the next year. So when you get these sharp changes, momentum underperformed both in 2008 and in 2009. So it can outperform in a even in a downward market is what I'm trying to say. It'll
Yeah.
underperform when there is a sharp changes. Now coming to your part about how are we controlling for risk? In our
Yeah.
case, we are controlling for risk based on two parameters. One is when we size the position of a stock in the portfolio, we will size it based on two parameters. One is the liquidity of the stock
Mm-hmm.
and the market cap of the stock. The liquidity of the stock and the risk of the stock. So by
Correct.
liquidity, I mean the traded value volume or the traded value. So
Okay.
irrespective of how good the momentum score of a stock is, if the
Hmm.
liquidity is poor, then that stock will get a lower weight in the portfolio. And
Okay.
similarly, if there are two stocks with similar momentum scores, but very different risk profile. So let's say you've got a consumer stock and you've got a steel stock with same momentum score, but very different. Obviously, the risk profiles are very different. Then we will go with the stock with low. Then the stock with lower risk will get higher weightage, and the
Mm-hmm.
stock with higher risk will get lower weightage because the
Correct.
momentum scores are similar. So we
Okay.
will scale our weights, or we will decide our weights based on liquidity and the risk of the stock, which is why we believe we'll be able to control for the overall risk profile of that product through the cycle. And we've seen through our backtest the maximum drawdown that we've seen is been lower than what we've seen in the broader benchmarks. So as I said, momentum is a slightly higher risk strategy. You can't completely eliminate that slightly higher risk, but we'll try and control for it.
Definitely. So then, could you elaborate more on the quantitative and qualitative parameters used for stock selection?
Okay. Uh, this is largely a quantitative product. So what we do is, in this case, we start with a universe of Nifty 500 stocks.
Correct.
From there, in terms of defining our universe, we will eliminate stocks for largely three reasons.
Mm-hmm.
One is the tails of Nifty 500 has very limited liquidity, especially in correcting markets or in slightly down markets. Liquidity can dry up very quickly.
Mm-hmm.
So we will eliminate stocks that have extremely low liquidity. Second, obviously, stocks that have hit the market recently, as in they've just IPO'd recently,
Mm-hmm.
they don't have the necessary price data or the duration of price data to calculate the trend or the establish that there is actually a trend. So some of these stocks that have IPO'd recently will not be part of the universe till they meet a certain threshold in terms of historical data.
Mm-hmm.
And third, there may be companies that we as an AMC don't want to be associated with because we don't believe we believe there are larger corporate governance issues with them. So there
Right.
are those, and all put together, we will kind of eliminate some of these stocks, and we'll be so far. I mean, obviously these numbers kind of evolved, but as of today, we are looking at a universe of around 400 stocks.
Okay.
So out of the 500, we kind of eliminate 80 to 90, 90 to 100 stocks, and we are left with 400 stocks. From those 400 stocks, for those 400 stocks, we will calculate the momentum score for all the 400 stocks. The
Okay.
momentum score is calculated based on how well the stock has done over a period going from 1 month to 12 months, and how consistent is that performance. So the better, so if it is done well during that period consistently, it will get a high momentum score. And if it is done poorly, then it gets a low momentum score. Obviously, now that momentum score is a primary driver of weight in the
Mm-hmm.
portfolio. But in
Mm-hmm.
addition to that, we will also look at, as I mentioned previously, risk and the liquidity of the stock to decide the final set of weights. All of this process is systematic, algorithmic driven process. None of it is based on manual intervention.
Mm-hmm.
All of this is done systematically. And then the portfolio will be rebalanced on a monthly basis.
Okay. So then, how does the fund ensure that balanced exposure across sectors and market caps to avoid over concentration risk?
Okay. So with respect to sectors, we do have sector limits in place, both at the higher end and the lower end. So that,
Mm-hmm.
see, the point is not to be benchmark hugging, but what we want to do is we don't want to take wild sector bets, as you
Correct.
put it rightly. We want to have it in a certain range. So we
Correct.
will kind of in the process, we have set limits both on the upper and the lower side for every sector as to what
Mm-hmm.
that range should be. So that is how it
Mm-hmm.
gets taken care of at a sector level. With
Okay.
market cap, the approach is slightly different. With market cap, look, for me, to me, market cap only matters because market caps are associated with liquidity. So
Correct.
I only care for the liquidity of the stock. So I will size my position based on the liquidity of the stock, as I told you previously. But otherwise, I don't care for large, mid, and small. So
Mm-hmm.
if the momentum, let's say we are looking at 2020, where the markets were fairly concentrated and large caps were doing well, then my momentum portfolio will reflect that by having more large caps as part of the portfolio. And if
Yeah.
you are sitting in a market like late 2022, where breadth of the market was doing well and momentum was more in mid and small caps,
Mm-hmm.
then your portfolio will have more of mid and small caps. So the when it comes to cap sizing, it momentum portfolio will reflect what is going on in the market. But I
Okay.
will control
Okay.
for that by ensuring that at a position level we remain liquid enough.
Okay. Actually, you answered the question that I was, about to ask, was the portfolio composition, and which you actually quite rightly answered that the way the market is moving, I think the portfolio will try to reflect that, and whatever the momentum is actually, showing it to us.
Yeah.
Okay. So my next question is, can you tell us how the momentum strategy adapts to the different market cycles or, any unexpected economic events?
Okay. So as I said, unexpected economic events, something like a black swan is a period when momentum can struggle. But when it comes to changes in trends and changes in style, momentum does fairly well with regards to that. So,
Mm-hmm.
for instance, if you look at momentum did so back in 2011 and 2012 when value was underperforming and
Yeah.
quality was doing well. Momentum portfolio momentum performance was much closer to quality than to value, because
Mm-hmm.
it essentially was because momentum was doing well, it had more representation of quality stocks. Similarly, fast forward to 2022, 23, 24, over the last couple of years, you'll notice momentum is much closer to value in terms of performance. So for this year, at least till end of October, I think value had returned 29%, momentum had returned 27%. These are Nifty momentum indexes, and whereas quality returned 17%. So effectively, what you're seeing is uh, what you're seeing is that momentum kind of changes loyalty based on what is working in the markets, and
Okay.
that happens not just at a cap level, but
Mm-hmm.
also happens at a style level. I've got a interesting slide that I can share for the cap level in terms of how it adapts to changes.
Sure,
Uh,
sir, sure.
so so for instance, if you look at this slide here, let me know when you're able to see this.
Yes, I am.
Yeah, as I said in one of the previous questions, is that back in 2020 the markets were quite consolidated and large caps were doing much better. So
Hmm.
you had a case where in the portfolio in December you had almost 60% large caps and 40% mid and small caps. Fast forward to
Correct.
2022 when markets were broad based and large caps were actually mid and small caps were doing much better. Then
Mm-hmm.
what you noticed is that large cap was only 30% of the portfolio, whereas
Mm-hmm.
now your mid cap and small cap together constitute 70%. So
Correct.
it effectively kind of switches, switches, but with a lag. So there is a
Okay.
lag because that lag is required to establish the trend, because you don't want to
Yeah.
jump into something only to realize that it kind of reverses the moment you kind of jump into that position.
Correct.
You
Correct.
want a
Correct.
trend that is sustainable and that you can latch onto. So you have to differentiate between short-term trends that are sustainable and that are unsustainable. So to figure out the sustainability, you need to give it some time, but it does a good job of timing it in general, be it across styles or be it across cap space.
So how do you identify, what are short-term trends and long-term trends? I mean, when you mention right now that
Hmm.
sustainability, it needs to sustain. So what are the parameters that are in place to understand that, boss, this is a short-term trend or this is a long-term trend, and I need to jump in right now.
Okay, so what we do is we measure momentum based on the price returns over different periods, starting from 1 month to a max of 12 months. The
Okay.
more consistent that performance is during that period,
Mm-hmm.
across time horizons, different time horizons, the more probability that the trend is well established. If
Okay.
you've just got price performance in certain windows and majority of the windows are missing, then it could be a case where the probability of the trend continuing is much weaker subsequently.
Okay. Last couple of questions, sir. The fund deck mentions, the strategy has generated better risk-adjusted returns.
Yeah.
Can you elaborate more on that?
So if effectively, what we mean by that is momentum is a slightly higher risk strategy, but
Mm-hmm.
when you look at it versus compared to the returns that momentum, even if you look at based on Nifty indices, if you look at
Mm-hmm.
how well it has done over time, it has outperformed over the last 5 years by I think roughly 5 to 6%.
Mm-hmm.
For a slight incremental risk you have taken. So if you compare it to the return to risk ratio, momentum as a strategy has done quite well through the cycle.
This is the backtested data that you're telling about.
I was referring to more like Nifty indexes, but in our case, the model portfolio we have has
Mm-hmm.
generated an outperformance of around 6.6% CAGR basis over the last 15 years. Obviously, that is
Okay.
at a gross basis. We would have
Mm-hmm.
to adjust that against the total expense ratio of the fund. But even if you were to do that, the outperformance is quite healthy across the cycle, with largely 3 years of underperformance in between. But most of the majority of the periods, it's managed to beat the broader markets.
Okay. And the last question, sir, a quick word on the asset allocation strategy for the fund.
Okay. So this is not a house view. This is my personal view. I
Okay.
think momentum, as I clearly mentioned, momentum is a slightly higher risk strategy. So for conservative investors, I would recommend 7 to 10%.
Mm-hmm.
And for aggressive investors who are out there, because this returns momentum as a strategy has done well across cycles. So if there is an aggressive investor out there,
Mm-hmm.
then they can possibly look at 15 to 20% at an aggressive level, because the
Okay.
catch here is this category is quite new,
Mm-hmm.
nascent to our markets, and not many people have exposure to this strategy. So if you
Okay.
buy this fund, or if you get into this fund or get into this
Mm-hmm.
strategy, you are
Mm-hmm.
not doubling down on the same set of themes or stocks that you already have exposure to. This will be
Correct.
slightly different. So this will give you also the diversification benefit, which is why I said conservative is 7 to 10, and aggressive can go higher.
Okay. That's pretty much about it, sir. Thank you so much for talking with us. I would like to inform our viewers that the NFO dates for this Axis Momentum Fund is November 22, 2024 to December 6, 2024. The NFO is open during this period. We wish you all the very best, sir, for this NFO. We wish that it gets oversubscribed and opens to a huge applause and a huge, market response. And thank you so much for talking with us, sir, and hope to speak to you soon.
Thanks for having me, and thanks for all the wishes. Look forward.
Thank you.
Thank you.
Thank you, sir.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.